All right, let's get right into it. Today, we're going to peel back the curtain on how Wall Street really grades a global tech giant. We've got a Goldman Sachs equity research report, and we're going to break it down piece by piece to figure out their verdict on SMIC, one of the biggest names in semiconductors. Okay, let's do this. So you might be wondering, how do the pros actually do it? How do they slap a grade on a company that's worth billions of dollars? Well, you can think of it like a report card. You've got your past performance, your future promises, and all the potential pitfalls. And that's exactly what we're about to walk through together. Now, the document we're using for all this is what's called an equity research report. It's basically a deep dive investigation. Analysts, they crunch all the numbers, they grill the management, they assess the company's whole strategy, and it all leads up to one thing, a final recommendation. This report is our roadmap. And the company in the hot seat today? It's Smic. That stands for Semiconductor Manufacturing International Corporation. And they are a huge deal. As China's biggest chip maker or foundry, they're a critical piece of the puzzle for just about everything we use, from our phones to our cars. What happens with them, it sends ripples everywhere. First up, let's check out that report card. We're starting with the freshest numbers the analysts had to work with, the company's results from the second quarter of 2025. This is all about what just happened. And the headline number is, whoa, a massive $2.2 billion in revenue for just one quarter. That is a huge figure. But, a number that big always needs a little bit of context. And here's the context that really matters. That number was better than pretty much everyone thought it would be. See, when a company outperforms what the market predicts, analysts really sit up and take notice. It's the first clue that something interesting is going on. And here you can see exactly what beating expectations looks like in black and white. The consensus, what everyone was predicting, was about $2.16 billion in revenue. They came in at $2.2. Same story for gross profit. Smic didn't just meet the bar here. They sailed right over it. Okay, before we go to the next slide, we need to know about this key term, gross margin. For a manufacturer like Smic, this is everything. It's basically the profit they make on the chips themselves before all the other corporate costs. A higher margin, that's a sign of a really healthy, efficient company. And check this out. It's one thing to beat outside analysts, but Smic, they beat their own forecast. They told the market to expect a gross margin around 19%, but they actually delivered over 20%. So they were even more profitable than they thought they'd be. The big question, of course, is, how'd they pull that off? Well, according to the Goldman report, the answer comes down to something called the utilization rate. The easiest way to think about it is just, how busy is the factory? Are the lights on and are the machines humming? A higher rate means more demand, more efficiency, and you guessed it, more profit. And here's the story in the numbers. Smic's factories just got way busier. Their utilization rate jumped from under 90% in the first quarter all the way up to 92.5% in the second. And that jump right there, that's the engine that directly drove those better-than-expected revenue and profit numbers we just looked at. Okay, so that was the past. That's a report card on what just happened. But Wall Street, they are always focused on the future. So let's move on and see what the company is promising for the next quarter. So looking ahead, Smic is guiding for even more growth, another 5 to 7% on top of that big quarter they just had. But notice the gross margin, their profitability, they're expecting it to dip a little bit. That's exactly the kind of detail that analysts zoom in on. So we've got strong results in the rearview mirror and a solid, if maybe a little cautious, forecast ahead. So what's the bottom line? After all that, what is the final verdict from Goldman Sachs? And boom! There it is. Right from the report, we are buy-rated on SMIC. Now, in Wall Street language, a buy rating is a pretty strong stamp of approval. It means the analysts think the stock is a good investment and has a good chance of going up. But a buy rating is never just a gut feeling, right? It's always backed by a clear thesis. And here it is. The report points to booming demand from customers right there in China. They expect those profit margins to slowly climb back up. And on top of all that, they just think the stock is priced attractively. But hold on. A really good analysis is never all sunshine and rainbows. It has to be balanced. So now we got to look at the other side of the coin,
the risks, the caveats, the reality checks that come with that buy rating.
And this is so important to remember. A buy rating is an educated guess. It's a forecast. It is absolutely not a guarantee. The world is a messy place, and stuff happens.
And the report is very clear about the risks. What if people stop buying so many phones? That's a risk. What if their new factories take longer to build? That's another risk. And then there's the really big one, geopolitics. SMIC is on a U.S. government list that could restrict its access to key equipment. That is a huge variable you can't ignore.
And that brings us to our final section. It's the part everybody scrolls right past, but it might be one of the most important, the fine print. You'll see why the disclosures at the very end of the report matter just as much as the big headline at the start.
Every single one of these reports has to have what's called a disclosure appendix, and its whole purpose is transparency. It's there to lay all the cards on the table about any potential conflicts of interest and really to build trust with you, the reader.
And you don't even have to take my word for it. This quote says it all, and it's pulled right from that section. Goldman Sachs themselves are telling you, hey, this report is just one single piece of the puzzle. It's an expert opinion for sure, but it is not the final answer.
So what's actually in there? Well, things like this. The analysts have to certify the opinions are their own. But it also discloses that yes, Goldman Sachs does business with Smic, and that the analyst's pay is partly tied to the firm's overall success. Now that doesn't make the research wrong, but it's absolutely crucial context to have.
And all of this brings us to one final thought to leave you with. We've just spent all this time walking through a super detailed, numbers-driven report card on a company. But as we saw, some of the biggest forces that will shape Smic's future, things like geopolitics, trade wars, they're almost impossible to plug into a spreadsheet. So the real question is, in a world this complex, how much can the numbers on a page ever really tell us about what's coming next?